back to another episode of The Crossroads. And for the listeners, welcome back to the Long Game Podcast. This week, we are joined by Morgen, Rochard, and Isaiah Douglas, and we're going to be diving into all things Bitcoin. But before we get started, let's do some quick intros to give the listeners just a little bit of context. So, Morgen, you can kick us off if you wouldn't mind just sharing a little bit about your story, maybe how you first got into Bitcoin, and then just a little bit about your firm and who you guys work with.
Yeah, definitely. So my practice is 8 years old now. I've always been libertarian leaning, super into Austrian economics. And I learned about Bitcoin in 2011. And it didn't seem right to send a random wire to Japan to go buy Bitcoin that wouldn't be in my own account. It was at Mt. Gox at the time. I remember looking at those wiring instructions and coming from like a very, kind of like stiff suit background in finance, like working, at the like Merrill Lynch and UBS, being like, I can't send a wire to a random account that's not mine in Japan, like that would be crazy. Even though I, in my heart, I was like, well, maybe I should, do like $100 or something. So I didn't do that. And then relearned about Bitcoin again in 2013. And there was some more infrastructure in place at the time. You could do local Bitcoins, which became illegal actually, because there was no KYC process, but Coinbase actually popped up at that time as well. And I received my first Bitcoin from my husband, who we were dating at the time, and he thought it'd be really cute to send me a Bitcoin and be like, I love you, So it's like the gift that keeps on giving, really. But that's when I like relearned about Bitcoin and then started getting really interested in it. I started advising clients on it in 2016. When I started my practice in 2014, even though I was interested in it, I wanted to stay very compliant and I didn't want to do anything wrong. And I wasn't sure what the deal was with Bitcoin, but people actually started asking me about it in 2016. And I didn't want to be like, well, I can't give you any advice, like that felt wrong. Also, I mean, I have a fiduciary duty to my clients. So I started advising on clients who asked me about it in 2016. And then from there, I became a little bit more comfortable. When people would ask me about gold, I'd be like, well, what about Bitcoin? And those questions started coming in 2017. And then with the run up in 2017, I started getting a lot more outreach from clients being like, hey, what is this? Should I be thinking about this? What are we doing? So we started getting more clients allocated in 2018. And then finally in 2020, I was like, like doing a lot of Bitcoin stuff. Like I have discretion over client accounts. Like we haven't been able to get clients involved at this point, even though we've been doing outreach and trying to get people involved. Like they're going to get GBTC at this point. So that's been kind of the road. So in my practice, most of my practice they have their own keys. Some of them still have them on exchanges and we're working on getting it off. Most of my clients are doing a multi-sig solution through Unchained Capital, where the client holds 2 keys and Unchained Capital holds a third. And that's just in case the client loses it. Like if the wallet malfunctions in some regard, you want to have a backup. There are a number of reasons why you might want to set up a multi-sig solution. And we talk to clients about why they would want to do that. And we're also now in the process of getting people out of GBTC and into owning Bitcoin outright.
That's awesome. Perfect. That's awesome. And Isaiah, if you want to follow up on that.
Yeah, I want to give my wife some grief. She didn't give me a Bitcoin when we were... No, but so my name is Isaiah Douglas. I'm a partner at Vincere Wealth. We work with basically, I would say a similar demographic probably to Thomas and Trayton, like you all from the standpoint of like the millennial and then, Gen X type of generation. My focus has been specifically within dentistry and vet med, especially veterinary medicine, and then have a deep passion for talking about kind of the investing side and especially Bitcoin. And so unlike Morgen, in 2017, I was at Merrill Lynch telling people that Bitcoin was a tulip and fake. And look, when it crashed, we protected you. We were right. Actually, at that time, I got more interested when it didn't go away. So like 2018, I was like, oh, maybe I should look into this a little bit more. And it was really 2019, reading the Bitcoin Standard, which I cannot recommend enough. I think if more people read the Bitcoin Standard, the world would be a better place, right? Like I think if there's one takeaway, read that book. It'll change the way that you look at things. But then from there, I started, being much more public around Bitcoin in 2020, stating that, hey, this is kind of my allocation. This is what I'm doing. This is how I'm thinking about it, and encouraging people. And I just would put it on agendas and said, hey, let's talk about Bitcoin. What questions do you have? I think it's always, it's client money. Like they're always going to make the decisions on what they want to do, but I think they should be educated. And I think far too many advisors don't know the difference between Bitcoin and crypto, which I think is kind of what kicked off this conversation, and we'll get into more here in a little bit. But yeah, I think if you think about financial planning and Bitcoin, they go together beautifully. And if you have goals that you're saving for into the future, Bitcoin solves for so much of that. And that's why I'm passionate about it. And I want more people to understand what is Bitcoin, because I think a world that is built and more people understand what is money and why Bitcoin is the best money ever created, will be a much better place. And I have, 2 young kids, and that's the world that I want them to grow up into.
Yeah. Well, let's start there. I mean, I think we have to just first start with what really is Bitcoin. I think the hard part is like, there's a bunch of different answers. There's perfect money, there's store of value, there's just energy transfer. And, some people have different parts of it. Some people say all of it. And then I think there's people who hear that and like all of it. Well, nothing's ever been all of it. Like that's so wrong. That's just like a cop out because you don't know which direction it could really go. So let's start there.
You want to take this? Okay. So I want to start with Bitcoin as a money. And I don't want to put any identifiers on it. I don't want anyone to feel like, okay, we're calling it a perfect money, and therefore you have to attach to the thing that we're saying. It's just a money, right? And when you think about money, right, there are 3 things that you do with money. You receive it in some capacity. Maybe you earn it. Maybe you're gifted it, right? You get money in some way. You hold it for a period of time, known as savings, right? And then you go and spend it. That's what you use the money for. And I think that it's really easy to think about all the other potentials of blockchain technology and networks and other coins and everything else out there. But when we really boil down what we need out of a money, it's the freedom to receive, the freedom to hold, and then the freedom to send. And the reason why we like Bitcoin is because it gives you all of those 3 things: the freedom to receive, the freedom to hold, and the freedom to send in a really nice, neat package. You don't need to interact with a trusted third party in order to receive, hold, or send. Right away, that takes all of the financialization that has happened in our society out of your money. I think if people look at what's going on today in money, they can really see, okay, I'm not exactly sure what the Federal Reserve is doing. Like maybe inflation expectations have been low in the past, but now I'm going to the grocery store and like I could see inflation. I could see my dollars buying less. I don't really know what the Federal Reserve is doing. I don't know whether or not they're going to give more stimuluses. I don't know how much more money they're going to print or what they're going to do with the debt, right? There's a lot of monetary policy uncertainty when we look at our current system. And when you look at Bitcoin, there's actually a lot of monetary policy certainty. That's what is really beautiful about Bitcoin in and of itself, is that not only does it give you the freedom to hold, send, and receive, right? But it also does it in a way that's predictable, where you're not diluted out, where you don't have to worry about a trusted third party coming in and saying, oh, more Bitcoin, the rules are different now. We're just going to airdrop some of this stuff on you and see what happens, right? That's never going to happen in Bitcoin. So what you're trading, right, is this monetary uncertainty that we have in the current fiat system for monetary certainty. And there's a saying that we have in Bitcoin, which is TikTok next block. And it's because it's like a metronome. Every 10 minutes, a new block comes out. It's very predictable. You can go and look at what the monetary policy looks like. You can know really almost a certainty when the last Bitcoin will be mined. And you can see the halvings over time and what it's going to be and when those things are going to happen. I mean, not to like the date, not exactly to the minute, right? But we have pretty good projections on all of these things and when they're going to happen. That is just completely adverse to what we currently have in our society as far as a fiat system.
Yeah, let's stay on this because there's 2 common hesitations that I hear from this argument. So, and let's hit them both. So one of them is the fact that Bitcoin's slow. And, there's only a small number of transactions that can be processed in a short period of time. The second one is people view money and they say that if money is deflationary, then nobody wants to spend it, because if a Bitcoin tomorrow is less than a bit or more than a Bitcoin today, why would I want to spend it and be a good currency versus the dollar I would rather spend today than save it for the future because it's going to be worth less?
I would say the first piece on the slow standpoint. So first, I think you have to measure final settlement. And so if you think about MasterCard and Visa, it doesn't actually settle for 24 hours. So to me, that's much slower than Bitcoin. And as far as the throughput, I think that's something that when you look at Bitcoin, it scales, right? So there's base layer, Bitcoin, so kind of what Morgen described. And then there are, scaling layers where it will grow from there. And the Lightning Network is a layer 2, which does allow for that quick and easy payment. And that's what you're seeing. So when you hear like, hey, El Salvador adopted Bitcoin, merchants are accepting Bitcoin. Like they're using the Lightning Network, which has some trade-offs and there's nuance there that maybe we don't want to necessarily get into, but you have some trade-offs. But what you're able to do is you basically peg in and you say, I take this Bitcoin, I'm not creating more, and I'm going to lock it up, and then I can zip it around really fast. And it's really inexpensive and not, a lot of transaction fees, where if you look at other, I'll call them crypto projects or crypto assets or things, it's very expensive to send value across. It can cost like $100 on other blockchains, where it's like, No. That prevents people from being able to spend it and use it as money. And then the other piece that you talked about is the deflationary piece. To me, I've never met someone that didn't want to consume stuff, right? I don't think there's anyone that still will not want to consume. At some point, what it's going to do is there's this idea of time preference in Bitcoin, right? Like I'm going to lower my time preference. Great example, and I think Safety Namus, the writer of the Bitcoin Standard, talks about this. Look at just the architecture out there, right? So look at the buildings and things that are created. Everything is so low time preference. Get it now, get it now, get it now, get it now. Where back in the day, you could build beautiful buildings, but it took hundreds of years. But we still marvel at that, right? Like I think that's an easy example where people will spend, but they're going to value what they're spending it on versus trying to say, get it out of my hands because it's not going to be worth anything in a little bit of time. That's a good point. So I think the quality of things, of going back to, hey, I can actually make custom furniture instead of IKEA furniture. And I'm going to save up for that piece that's going to stay in my family for much longer, but I'm willing to spend Bitcoin on that. And I think a lot of people are willing to spend, they just will spend faster and charge things and take on debt to consume because of kind of the way that the society's built around it. And there's so many pieces here that we could spend hours just on that. And there are podcasts, obviously, that talk about just like what is money for a long, extended period of time. But I do not view this idea of like a hard money, because people will point to gold and say, well, gold caused the Great Depression, because we were on hard money, we needed, more flexible monetary policies. And if you look at periods of human flourishing and go back in time, some of the best periods of innovation have come under a hard money standard, and not a period of time where money policy, like the monetary policy, has been loose. And like Morgan talked about earlier, where you can just change things. Because if I can increase the amount of money in circulation, all that is telling someone else is that their time is not valuable. If I can create it for $0, it's going to trend towards the cost of production, which is zero. And all that is doing is that is stealing someone else's time and energy. So when you create this stimulus, or you forgive X, Y, and Z, or these people get these things, the dollars that you hold in your traditional bank account, they're coming and saying, hey, Thomas, we don't value your time. We don't think it's important, because we are going to create more of this because we think that that is right. And so many people think that an economy can be centrally planned when it's a complex system. I don't know anyone. There's tons of people that are brilliant around the world, right? But no one knows everything. Yet we rely on these leaders that think they can manage all these different areas and do it perfectly. And I think that's just a flawed, starting place. And so if you just remove the idea of like that they think and can know what the right monies are in the decisions, and just say, back again to what Morgan talked about, everyone knows the rules. The rules of the game are the same, and everyone can abide by those rules, versus the rules are always changing, but only a certain subset of people understand that.
Yeah. I
think that's an important thing, is if we're sitting down to play Monopoly and I'm going to change the rules every round, but I know the rules, and maybe Trayton knows the rules, but Morgan and Thomas don't know the rules every switch. Guess who's going to take advantage of that situation? And guess who's going to win? And guess who's going to own all the properties? It's going to be us that know the rules changing. Yeah. So
that makes a lot of sense. I have a lot of things to say here, but I want to keep going through what is Bitcoin, and then I'm going to come back to it. So let's go to, is there anything in your guys' mind? Is it just money in your mind, or is it the store of value, or what are the other use cases or viewpoints in your mind?
So just real quick. So Vijay Boyapati wrote The Bullish Case for Bitcoin. I think this is really, really important to understand. So when people will say, well, I don't want to hold a money that's so volatile and it's all over the place. You have to think about the way we've never seen anything come into play that has taken on the monetization cycle in the lifetime of anyone living, right? Like we've just lived through what we've seen, but it goes from collectible, store of value, medium of exchange, unit of account. Unit of account is when I go to the grocery store and it says, hey, so many sats for a loaf of bread. That's a unit of account. We are far from that. And again, you can argue where we're at today, but there are businesses that are accepting Bitcoin as a medium of exchange. And there's a reason for that. And I've written articles, and we've talked about this in the past, where you can actually lower those, merchant fees and these different things, where business owners, small business owners especially, I think can gravitate towards the Lightning Network and use Bitcoin as an asset to cut out expenses and be able to use that, right? But right now we're probably more in that store of value, which is why I think so many people say, well, why would you want to spend it? And, the HODL, meme that's out there of like, don't spend your Bitcoin, I think is foolish. And there are people that are on, Twitter that are hardcore that will say, never spend it. I don't think that's ultimately where it is. I think what they're saying is they want to accumulate and hold it because they know that in the future, there's going to be far greater wealth, and they will just use the excess cash flows at the moment to spend on versus, spending their Bitcoin. But I think it's important to understand collectible, store of value, medium of exchange, unit of account. We're in that process. It doesn't happen overnight. You don't go from, nothing in 2009 to all of a sudden, hey, it's perfectly stable. Everyone uses it. There's an adoption cycle. And I think people are just so darn impatient.
I think that's funny because you see like the, different people on Twitter who are like, oh yeah, some store of value now. And it's like, even if you could be right, like if Bitcoin becomes nothing, great. But any future store of value is going to have to appreciate and find that level before it becomes a store of value. And I think people really write that off. Like you don't just create Bitcoin and it's worth 60,000 or 100, whatever that number is day one. And then it, kind of sits around that number. It has to appreciate and find what that value is based on demand first. And we're still in that phase and we probably still have a long way to go.
I want to add to that too. I mean, I think Bitcoin is a money and it's not meant to be anything else. I think that that's the difference between Bitcoin as a project and everything else that is out there. It is supposed to only be a money. In fact, all of these things are called cryptocurrencies, right? There's a reason why currency is in the name. And so we can argue about many other coins and why they are definitely not currencies. But when you think about Bitcoin, right, we're thinking about how can we use this as a currency? And there are aspects of currencies. It's not just the store of value story, right? You need a money that's durable. You need a money that's portable. You want something that's fungible. You want something that's verifiable, something that's divisible, right? Like gold is very hard in that capacity. You're going to be sitting there shaving off pieces of gold to go buy your local coffee, right? That's not really a good way to use your money. And yeah, you can make coins, right? But minting gold coins is expensive, right? So divisible, right? When we think about these things, you can even say that of the dollar, right? A Bitcoin it's divisible up to 100 million per coin, right? Whereas the dollar, right, it only goes down to a penny. Not that at this point in our inflationary cycle, we would ever need less than a penny, right? But I mean, just to be clear, right? Bitcoin is way more divisible than the dollar is. You want scarcity in your money, which is not something that we have in our fiat society. That's what the store of value came about. That narrative has come from the idea that we live in an environment where we are constantly being deflated. I'm sorry, not deflated, excuse me. We are constantly being inflated out of our money and being diluted. And if you have a money where you're constantly being diluted, you are forced into two situations. You either spend your money as quickly as possible, which is why people are afraid of this deflation narrative of, oh, well, if there's deflation, then people won't spend their money and then the economy can't grow. And it's like, no, people love spending money. You don't need to incentivize people to spend money, like Isaiah said, right? But it's also that you now have to invest as quickly as possible, I think is the other side of it. It's actually part of our profession. And what makes us useful is that we help clients get invested as quickly as possible because literally their money is losing value overnight. So you're either forced into very quick investment or you're forced into spending, but there's no scenario and there's no advisor out there really who would ever say, hold lots of cash. I'm so excited for you to hold cash. Keep lots of cash so that we can wait until we find that right investment opportunity, that right piece of furniture that Isaiah was talking about, right? The right thing for your family. Like that's just not something that we talk about because we basically use the S&P 500 right now as a savings account. And so I think it's easy to say, okay, well, Bitcoin, is extremely volatile and doesn't have an established history the way maybe gold or even the dollar does. And the dollar, maybe not so much, like we can get into that if you want to, but just because it doesn't have this established history yet doesn't mean that it's not going to become all of these things. And in fact, Bitcoin is really quite durable. It's extremely portable. It's the most portable money out there. You can actually have 12 words in your head and basically go across all borders. As long as you know your 12 words, you can carry as much Bitcoin as you can in your head, right? It's fungible, right? One Bitcoin is one Bitcoin. You can use it, however you want to use it. It's verifiable, actually more verifiable than I would say any other currency out there. It's extremely divisible and it is scarce. And I think that people don't like to hear this when they think of Bitcoin, because if you're not on board with Bitcoin and you're afraid of Bitcoin because of its exchange rate risk and its volatility, then it's hard to hear the case for it, right? It's hard to hear why you could hold something like this that really isn't maybe a store of value on any given day, but could be a store of value over a long period of time.
I think that's the hard viewpoint to view.
Mm-hmm.
So Preston Pish, who after you listen to this podcast, you should go listen to what Preston Pish, he was just on What Bitcoin Did with Peter McCormick. And it's a fantastic conversation that every single person should go watch and understand. But he had a quote in there that I felt like was really important to bring up with just what Morgan talked about, which is if your currency isn't scarce, everything else on the planet that people actually desire will become scarce. And we're seeing that. Let's talk about housing, for example, right? Look at housing. People cannot get a house at the moment, especially millennials, right? Our clientele, everyone wants to move or make adjustments. It's just like, it's so hard right now. Rents are going up through the roof. You see housing prices starting to maybe roll over, and that bubble maybe is bursting. We don't necessarily need to make this a housing conversation, but so many things that people actually want are really hard to get. And the other thing that I think makes Bitcoin really fantastic and the best money that's ever been created is it's apolitical. Regardless of what you think, you might be in an environment where you agree with everything that the government has done. Whatever country you're in, that's great. But when it changes, do you want the government in that country to dictate what you spend your money on, how you spend your money, and what you do? If you go out and create value, you should be free to do whatever you want. And I think there's been two great examples that are the biggest advertisement for Bitcoin in existence, which is the Canadian trucker situation, regardless of what you think about it, and Russia. Russia had their foreign reserves seized. The United States weaponized the dollar. And what that signals, that tells everyone in the entire world, if you piss off the United States, your money's not actually yours, it's ours. And so you cannot tell me there's not been a better advertisement for what Bitcoin is. It is apolitical money that says, I don't care who you are. It is friends and foes can use it. And I think some people will lean on that, like, oh, well, only criminals use it, or they'll use the Silk Road narrative. Bitcoin, like Morgan said, is just money. It does not care what you use it for. It is just there to continue TikTok, next block, do what you tell it to do. And that's it. And that's a beautiful thing. It doesn't need to have all these other characteristics. I don't need my money to be sexy. I need it to work, and I need it to work and be resilient and robust. Most crypto projects have been built, created in a world of everyone plays nice and everyone talks nice about each other, and not in a world of attack. And Bitcoin has been through attack after attack after attack, and you can't kill it. That's why I call it like it's a cockroach. It does not die. Yeah. It is going to be here, whether you like it or not. And I think the biggest thing that Morgan and I have talked about, and my wife has asked me this, if you believe that Bitcoin does what it does, why do you tell people? Why don't we just buy as much as we can, not tell others? No. Because if we are correct on where Bitcoin goes, and Jeff Booth, who wrote a book that everyone should read, which is called The Price of Tomorrow, talks about it, deflation is the key to an abundant future. He talks about you cannot build walls high enough. And so what fiat currency has done is created the haves and the have-nots. Bitcoin balances that, because if I'm working and I get value for whatever it is, maybe I'm working on the yacht that you have, Thomas, and you're super wealthy, and I'm scrubbing the deck, but you know what? I spend less than I make, and I have Bitcoin, and no one can dilute me. No one can make more of it, and I can save that up. I can pass it on to my kids, and I can change the wealth from generation to generation. You can't do that with fiat currency. I can't save dollars to do that. And so to me, if I'm playing the long game, which I think is the title of this podcast, Bitcoin is the long game. So start playing.
Yeah. That's going back to your point, the two situations where you said we see Bitcoin make sense with Russia, Canadian truckers. I think that's interesting because I have the same viewpoint. I threw on Twitter this whole point, and I have people come back and be like, oh, well, why do we even need that? Because if the government really wants to get rid of you, they can throw you into prison. There's nothing you can do. And I'm like, okay, great. That's true. But what about the whole middle ground before that, where they're not imprisoning or putting everybody in prison? And there's all these people that they're like, well, you know what, you're protesting, so now you can't spend your money. You can't do anything. We're going to hold your assets. Like, those are people that they're not going to, fill every prison with them. But there's that middle ground where being able to control your money does really matter.
Yeah, totally. I like to piggyback on the censorship resistance part of it. I think it's really easy for us to say in the first world country that we live in, where our rights are not violated on a regular daily basis, right? That, oh, well, I don't need that censorship resistance thing because the government's never going to come after me or my money. But they can, right? I mean, and I think it was 2013 when the Edward Snowden thing all came out, and that they're watching us at all time. They've got they could probably find some sort of probable cause on anybody, right? Based on the amount of data and stuff that they're collecting on every single American. And we could talk about whether or not that's unconstitutional or not. But the point is that they are doing it, right? Whether we like it or not, the government is doing it. It's a lot harder for them to go knock down doors, right? And start pulling people's hardware wallets out of their safes and mattresses and wherever else they're storing it, right? Than it is for them to just say, nah, freezing your Chase account. I'm freezing your TD Ameritrade account. I'm going to take your safety deposit box, right? Like, those things are a lot easier for the government to do than it is for them to literally go door to door and start getting rid of nodes and also seizing people's hardware wallets. So I think from that perspective, right, at the very least, even if you're not worried about the government though, right, in your country, at the very least, you can understand why people would be and maybe would want to take a little bit more ownership of their asset and give themselves at least some protection against that.
Yeah, I think, I mean, kind of to segue a little past this, but I think the interesting thing that gets brought up to me all the time about Bitcoin is I haven't come across anybody that disagrees with the problem. The problem with, money today, inflation, no control, all those things, like everybody agrees with the problem. But I think then what people say is, but why is Bitcoin the solution to that? Like, so it says it, how do we believe technology? Like, what if somebody does figure out a way to change it? What if it does get hacked? Like, what if it really isn't the solution? And, what would you guys say of like, why is it really the solution to all these problems that we agree we have?
So there's a couple ways that you could answer it. And again, you always have to hold out. Maybe I'm wrong. Maybe I'm wrong. I don't think I am. I think what will happen is people will watch this in 20 years and say, damn, Morgan was really smart. She was spot on. Right. Like I have confidence that it works. But you also have to hold out, like, what if you are wrong? And a lot of people will say, well, what if Bitcoin is the MySpace to something else, being Facebook, right? Yeah. It disrupts it. So what Satoshi did is take a lot of innovation that happened over 40 years. And it was the combination of those things. It wasn't like everything was from scratch, invented in one fell swoop. So I think that's super important that a lot of people don't understand. Like look historically into the cypherpunk movement and some of the things that were done that were attempted as like eCash or DigiGold or these things that failed. And what were the issues? And then what did Bitcoin solve beyond that? And to me, that is one of those key things. But you also have the idea of the first mover advantage, right? The immaculate conception that is Bitcoin. If Bitcoin came out today in the exact same format, it would get squashed. It wouldn't happen. It was a perfect moment in time that you cannot duplicate that. Every other crypto is what I would call a VC-backed dyno, which is decentralized in name only. And it has a founding team. It has investors. It has a marketing team, a CEO. They're called companies. And these are conversations, and Morgan can talk about this too. We have clients within our organization that work at said crypto projects, whatever, right? If people are intellectually honest with themselves, they understand, hey, it's a little bit more like a VC startup. So don't call it a decentralized product or a protocol when it's really not. And we can get more into that. And so to me, Bitcoin is the thing that is decentralized. And that's, again, it's only trying to be money. It's 100% monetary premium. It's not trying to be anything else. It is money. And so other things are trying to do other use cases. And that's not necessarily what Bitcoin's trying to do. Bitcoin's not trying to be other things. It's trying to be really good money. And it succeeded at that. And nothing else has come close to being able to do that. And if you start competing on monetary properties, Bitcoin, you can look at all the characteristics and it will win. It has won and will continue to win because typically good money drives out bad, right? And so people are not going to want to use 5 or 6 or 7 different monies, the same way that we're not using 5 or 6 or 7 different internet, protocols, right? And people will use that TCP IP type analogy. And I know there's some people that have done some awesome visuals around that. But the other thing is adoption curves. So when something hits, $100 billion, typically, it does not then lose its stated, kind of spot. So you look at Google, you can look at YouTube, you can look at Amazon, you can look at all these different companies, like it's in the lexicon. No one's using Ask Jeeves for, their searches on what they're looking for. Like Google won that and like people adopted it. And so there is that adoption cycle. And Jurian Timmer from Fidelity really started plotting out, and he is a great follow on Twitter, but Bitcoin is tracking the same trajectory as broadband internet, mobile phones, motor vehicles, railroads, steel production, cement production, same thing. And so the adoption curve is there. And again, I go back to, and I've talked about on Twitter, you might not like that Bitcoin is going to win. You might not like these things, but it is so incredibly early. There's going to be bumps in the road. There's going to be opportunities. I think it's just people need to work and explore and work through trying to understand and grapple with what it is and not just write it off. And I think that's the biggest thing that, if Morgan and I can encourage people, it's you don't have to believe the same things that we believe. You don't have to be libertarian. Bitcoin is, again, apolitical. It's for everyone. You can make a really good case for why it is for those on the left and for those on the right. It does a lot of great things across the board. It is not a conservative or liberal thing. It's just money. And then you can use it however you deem fit.
Yeah, I want to add to that too, regarding it as a software project. First of all, some of the best software engineers in the world are working on Bitcoin. I think that some people, when they say, oh, well, like, what if quantum computing makes Bitcoin obsolete? Or what if Bitcoin gets hacked? Or what if Bitcoin has a bug and all these other things? I think if people actually looked at the open source code and saw how many people are constantly working on it, and saw actually the caliber of people who are working on it, these sorts of arguments wouldn't even really be an argument. I think it implies that Bitcoin works in a vacuum. If you think that all of a sudden, or really software engineering in general is happening in a vacuum, there's no advancement in software engineering that will automatically come out and make everything obsolete, while other things don't adapt alongside of it. I think it assumes that like when quantum computing happens and it would make Bitcoin otherwise obsolete, that software engineers aren't working alongside this the whole way to make sure that that doesn't happen. There's so much money in this network. There are so many people who care about securing this, that's not an option. And so I think that like that's an easy argument, like, oh, well, like all software has bugs, so therefore I can just sort of ignore this Bitcoin thing. And that's true. Bitcoin has had bugs. But many people are looking at it. There are so many eyes on it and so many people are aware of it that it's just simply not possible that somebody would be able to come out with something that would be able to render it obsolete.
Yeah. And the other thing too is, the neat thing is like you have the value that is stored within the network, and that just harnesses on human greed where everyone has a vested interest to protect it. And so there's going to be more people spending time, energy, money to protect it. And so it gets more secure over time. And yes, could quantum computing come along and do that? Yes, but then that would hack into everything else and destroy everything. So like, then you can be like, okay, well, I'm just going to have soup cans and bullets in my basement. Like, okay, you can go that direction if you want, but I don't think that's helpful for anyone either.
Yeah. You made an interesting point about like how basically Bitcoin goes up in value as more people want it and more people buy it. And I have people tell me all the time, they're like, well, what's the difference between that and a Ponzi scheme then? If what I have to do is if I buy it, I want everybody else to buy it because it's good for them. And then they want everybody else to buy it because it's good for them. And it keeps going on farther. And then they're like, well, let's take it even further. Can it even be more of a Ponzi scheme? The fact that like, what does it actually do? Like this is not what I believe, but this is what people tell me. They're like, well, why would I buy into Bitcoin versus a company? Like company has financials, then you can get paid dividends. It's based on cash flows. Like Bitcoin isn't that, it's really just supply and demand. Why would I want to invest in that?
I would ask, what is money?
Yeah, I was just going to say that.
So you have this business that's paying you, but what is it paying you? And what's your numeraire? What are you measuring things in? So here's a fun stat for anyone to go look out. Start dividing things by Bitcoin. So you have fiat currency, which has an unknown amount that's in circulation, an unknown future amount. So you have infinite and infinite versus everything divided by 21 million. That's pretty easy math. I know when I have my slice of the pie is not changing. And so that's great. You can have, and there's actually some really good charts that I would encourage you to look at. You can look at the stock market in Turkey, and it looks like it's going parabolic straight up, but they have inflation rates over 70%. People are literally using, buckets of cash to buy stuff. Like, is that good? Yeah, sure. Maybe they're getting dividends and they get more dividends and it's growing, but it's like, at the end of the day, like, what are you actually using it for? And the idea of the Ponzi scheme, if I get someone else to say they become a Bitcoiner, it's not like I move up and get more of a share of it all of a sudden, right? And I think, you look at MLM schemes, and again, there are fun FinTwit advisors that have, it's called Bitcoin Beanie Babies or other things. Yeah, and there's all kinds of really good facts and figures and data that you can point to say that's not the case. Same way, like the tulip bubble, all these different things where it's like, no. Like those had a moment of time where they crashed and it never came back. Bitcoin's had these moments of being dead forever. There's a good, Twitter follow, is Bitcoin dead today, right? And it tweets out every day, no. And you can look, Bitcoin's been down 93%, 85%, 83%, and the most recent 72%. And we can get into, if you just want to look at Bitcoin and you think, hey, everything else is BS, I just want to make money, who cares about the rest of it? We can make a very compelling case to say, yeah, even if you just add it to your investment portfolio, it's just an investment. It's done really well. And I think we can dive into those facts. But the Ponzi, it's not like I'm leveling up if I get more people under me. If I recruit 10 people, I don't step up to another level and get a bump. Like that's not really what Bitcoin is. Again, going back to what is money, describing that, understanding it, and what makes good money. And if you think that other people should have the ability to create, change, adjust, and do things, then yes, continue to stay and use the dollar, or say, okay, we want rules in place that everyone knows and everyone is held accountable, and that's enforced. That seems like it just on the surface, first principles makes a heck of a lot more sense.
Yeah, and I'm kind of curious, which this is a little bit of a tangent, but like what you guys think like the end game for Bitcoin is, because like you said, like first mover advantage in crypto, that Bitcoin got that, and it kind of has like the network effects, like a lot of people are invested in it just like the dollar has. But then Bitcoin's only volatile if it's denominated or like measured in dollars. Like Morgan was saying before, one Bitcoin is always one Bitcoin. So it's like the grand idea that Bitcoin becomes like the global standard and then everything's kind of based off that, or is it always going to kind of be like an alternative investment sort of thing, or do you see it like kind of actually becoming that like currency?
I'll take this one if you're okay with deferring to me on this, Isaiah. So I think that there's a concept in Bitcoin, and Parker Lewis wrote a nice slew of pieces on it called "Gradually Then Suddenly," and the idea is basically what we're experiencing now. And I think that people don't really see Bitcoin as gradually because, I mean, basically a new money has appeared on the scenes that is now worth, a few $100 billion at this point, has seen a market cap of 1 trillion, has done it in less than 15 years, and is really largely a growth currency. And that the bet is basically that there is going to be adoption along the way and more adoption. And then eventually, right, I think some people think it'll live side by side, right? They're not really sure how Bitcoin is going to fit into the grand scheme of things. But like Isaiah pointed out, good money does drive out bad money. That's known as the Lindy effect. And eventually, yes, this, I think, is going to be the global reserve currency. Will that happen in my lifetime? I don't know, right? Like, I think it's anybody's best guess. I think it's really easy as a Bitcoiner to think that things are going to happen a lot more quickly than they otherwise would, because we see this as something that is just so exciting and amazing. And how could you not want to take full ownership of your money and not be diluted out, right? Like, how could everybody not see that? It's crazy. But at the same time, it's kind of ridiculous, right? Like, not everyone is going to see that at the same time. That's kind of the reason why it's volatile to begin with. Not everyone's going to get the entire value of it from the get-go. Some people are just going to see it as an investment versus what it actually is, which is a currency. Some people are going to have the viewpoint that Thomas was pointing out of like, why would I rather own this than something that has cash flows? Cash flows are something, and dividends are something that I can feel. And we've been seeing actually this in the altcoin universe, to bring that in, of yield farming, and other coins that have come out where there's a number of ways where you can get yield, quote unquote. The first way you can get yield, right, is you go and lend your Bitcoin or your other altcoin to one of these places. I'm sorry. Yeah, you lend and somebody borrows basically against your Bitcoin, and there's some sort of spread there. I think that people are not appreciating the amount of risk that they are taking when they go to get that 6 or 7% yield out there. And we have been seeing this, right? Celsius is just something that blew up. Their BlockFi just needed to get a big bailout from FTX. And
Voyager.
I think that Voyager is also on the way down today. So, I mean, there's just a number of reasons why you maybe wouldn't want to take that risk for, let's say, a 6% yield, right? Then on the other side of that, right, are what altcoins are basically, they're diluting you out. So you go and you get an altcoin and you get yield from that altcoin and everything seems great. I'm earning 10% yield on my altcoin. Fantastic. Except that you have this exchange rate risk, right? So as soon as your altcoin goes down 10% from where you bought it, right now, you're breaking even. And then if it goes down more than that, obviously you are losing money on that prospect. And in the meantime, also you're holding something that has questionable value to begin with, right? Because you are being diluted out by the mere fact that you are getting more as yield, right? So I think that people really get excited about cash flows and yield and value in that regard, but like they don't look at the opposite of that, which is every time I get yield on my altcoin, I am literally being diluted out. That is what they are telling me. They are making more of this thing with no end in sight. And then the last one, which I think is even most questionable, is you lock up your altcoin right somewhere, and not only do they not give you yield on that altcoin, they airdrop some other random altcoin onto you and they say that that's 10% yield. I mean, that's like, I think worst case scenarios, right? You get like involved in something where you buy some altcoin and then you get yield on some other altcoin, both of which probably have questionable value. So to circulate this back to your question about like what's the end game for Bitcoin? Yeah, I do think that the end game is that we all use a global money where we don't get diluted out, and where we have like the utmost faith that our currency is going to be there for us when we need it, right? Like that's best case scenario, is that we live in an environment where we all use Bitcoin and we don't have to worry about when we go to Europe buying euros. And we don't have to worry about like what our government is doing, or where we're going to vacation, what that government is doing. And it also trickling down into all of the other places, right? Like where people actually really could benefit from a money that's seizure resistant, where the government can't get themselves involved at any given period of time, where you don't need a trusted third party to open an account, right? Like, I mean, I think that like it's really easy for us to say that we don't care, or because we're not involved, because here in America we have all those rights. But right, if you look at places in Africa, that's not really necessarily the case, right? People don't have the same access to what we have here.
Yeah, I find that people don't really understand that. Sorry, Isaiah, you got something to add to this?
There's so much. So, but there's a saying called Bitcoin fixes this, that's out there a lot. And I'll be damned if that's not so true. I mean, you can look at it from so many different levels, and I'll have passionate conversations with my brothers, right? Who see the world very differently than I do. And they'll talk about how to solve this problem or that problem. And I'm like, go upstream. What's upstream of that? What's upstream of that? It all goes back to money. You have bad money and all the incentives are broken all the way down. So if you fix the money, that is why I am so passionate about Bitcoin, is like, that's a better world. And maybe it's because I have young kids and my mindset has changed a little bit from that standpoint, but it's not just about me anymore. Right. And so I want a world that's much better than the one that they're coming into right now. And so to me, Bitcoin does fix that. And I will tell you, yes, 100%, it will be the global reserve currency. And you might not like that again, but it will happen, and it will take more time, right? Morgan's right. Like, I get fired up and like, oh, it's going to happen quick. No, it's going to take some time to get there. But there were, here I have it, 44 global nations that visited El Salvador on May 16th. That was not on Fox News, CNN, all those different things. And they were there to talk about Bitcoin and how it benefits them. The countries that are going to adopt Bitcoin and push it forward are those that have been under the boot heel of the US dollar for years and years. When we create money and their citizens have to use wheelbarrows to buy bread, that's a problem. And so they're going to adopt it first. The United States is not going to be a first mover, but shoot, we have the hash rate. So when you think about Bitcoin mining, we haven't even got into the energy, and that would be a great conversation too. But United States has about 30% of the global hash rate. So Bitcoin miners sit in the United States. Most of the Bitcoin wealth is in the United States as well. Like it's hard to predict, like exactly get that, but there's a lot of wealth in the United States. The United States would be making a horrible mistake if they went and tried to ban that. And the other thing is Bitcoin harnesses human greed, and people are going to be driven to adopt it in the United States because there are wealthy people that are starting to own it. And I think that's what's been the big shift since like 2019, 2020 is it's got de-risked because you have big name hedge funds and big name people that it's not just the crazy person with, the Cheeto fingers in the basement that's talking about Bitcoin's great, right? Like all of a sudden you have people that are legitimate. And I think that is something that is really, really important. And the idea of like people will come for the number go up, like I want to make money, and they stay for the freedom money and they understand what the hell it is. And so, yeah, it's going to be the global reserve currency. And I think that is where it plays out. And I don't know age difference between Morgan and I, but I think we're both live a long time. So I think we'll see it in our lifetime.
Let's go into the energy side now. I think that's a good little segue as you brought that up. So I'm just going to hand that off to you.
Yeah. So I think that the energy concerns are overblown. The reports are I don't have any else. I wish I had come armed with numbers for this specific question, and maybe Isaiah, you have some, but basically what I've seen happen from reporters is they take little sound bites that seem really exciting to people that will trigger them in some regard in regards to the environment and make it such so that Bitcoin seems like it's consuming way more energy than it actually is. I think if we put some things into perspective right now, I think finance is like the number one profession that people want to go into. And right now it's about 35 to 38% of our economy right now. Why is it 35 to 38% of our economy? Have we ever asked that question of whether or not the current financial system as it stands today is consuming an inordinate amount of time, energy, talent, money, and so forth, and forcing people who would otherwise maybe do actually productive things with their time into careers like investment banking and so forth, so that they could be as close as possible to the money, so that when the money is printed, they are the first to receive it, which goes back to Isaiah's comment. I mean, I think that it's really easy to say, oh, well, we plug Bitcoin into the wall and therefore it uses energy, and so that's bad, right? We do all sorts of things like that in our life. We plug our phones in, we plug our cars in if you've got an electric car, right? We plug everything. And the reason why we're having this conversation is because we're all plugged in. We're not, we're all in different locations, right? We use energy because we're human beings, and that's how we create a productive and meaningful life. And so to say that money shouldn't have any energy behind it, that it shouldn't have any proof of work to actually ensure that that money is true and real, is insane to me, because especially considering the amount of resources and time and talent that goes to it now. I think that actually, if anything, it'll be more energy efficient if a lot of those redundancies and other really quite ridiculous professions go away.
Yeah. And I would just echo, there's so much good research that's out there that people are just too lazy to actually go read it, and they'll recycle things that were published in 2016, 2017. And there was I think it was 2015 that, Bitcoin would use all the energy in the whole world by like 2020, which didn't happen. Right. But yeah, if you look at the current banking system, it uses significantly more energy than what Bitcoin does. And this is from ARC, well, it's Block now. It was Square when they put it out, but they talked about how green energy will actually be helpful because of Bitcoin mining, because it can come alongside and be the buyer of, last resort, and they can also turn it on and off. And so it can help make grids more stable. And you've seen that in ERCOT down in Texas, right? I always get ERCOT and Epcot, which I know are not the same thing. I always am like, shoot, I messed those up. But you can look at energy, and if you want to say, hey, I want to be low energy, carbon neutral, all that other fun, frou-frou ESG stuff. I have lots of issues with ESG, but we can have me back on for another podcast there. But if you look at how much energy is consumed, that is tied to human flourishing. The more energy that we consume, the better your lifestyle has been. If you want to be the lowest, carbon footprint person, you live in Burundi and your standard of living is horrible. No one wants that. And they're lying to you if they say they want that. So the idea that we should not use energy for things that make our lives better is foolish. But look at gold mining, look at all these other things. All Bitcoin mining is it's just servers. We don't complain that Amazon AWS is using energy. Mm-hmm. So to me, it's just null and void. Christmas lights use more energy than Bitcoin. And you'll get this country uses more, Bitcoin uses more energy than this country. Bitcoin's more valuable than that country because it gives value to people all across the globe. I don't care if it uses more energy than Portugal, yeah, it's a beautiful place, but I mean, come on, Bitcoin is worth far more than that. So there's just these ridiculous things that people say, and then someone picks it up and they run with it. So to me, energy is a non-factor, and the more energy that's consumed, the better, because it protects the network. So yeah.
I think the energy, controversies never really made sense to me. One, because you just look at all the banks in America and think of how many lights they have on and how many pieces of paper they print every single day. And it's like, that has to be more than any Bitcoin mining. And then, I mean, from what I've seen, I don't know any hard stats, but just like more efficient mining is cheaper and it's better for the environment. So obviously over time, they're going to keep going towards the more cheaper mining options, which is more profitable for them and should, in theory, be better for the environment. So that one's never completely made sense either.
Yeah, that's also what we've seen too, right? Is that, so for the miner that that Isaiah was talking about is Riot Blockchain, and they're located in Texas here. They have one of the largest mining facility basically in North America, and probably in the world, but that's not the stat that they put on their website. And basically what they do is they have negotiated with with ERCOT about when they're allowed to mine. So they do basically during like really true heat waves and things here, they're turning off their miners basically during the day, and they're using energy at night when basically everybody else is not using it. And they get obviously discounts and other things for doing so. There have been other companies that have popped up too that are now using solar, they're using that gas. Nuclear has been floated as an option. We have a lot of ways to be energy efficient, right? We are just at a point right now where the conversations are not such where both sides agree on where that should go, right? I think that our future is nuclear. I think that that's where we're going. I think that in the meantime, right, we're going to quibble and quabble about whether or not we're going to do nuclear. And I don't know how long that's going to take, but once we get there, we basically have free energy. And it's going to be very cheap to mine Bitcoin, and very energy efficient. And that's where it's headed. In the meantime though, right, people are using solar, people are picking up excess energy and that would have otherwise been waste. And they're trying to use that for Bitcoin, right? They're trying to be as efficient as possible, like Isaiah pointed out, in lieu of having something like nuclear.
2/3 of all energy that's produced is wasted anyways. And a lot of it gets run into the ground or burned off at flare gas. And so you can harness that. There's plenty of energy out there. It's not a matter of energy being produced. It's energy being utilized, because so much of it is wasted, even just in transmission. And the other thing that I think is important to bring up, and maybe we switch over to kind of the Bitcoin versus crypto, just in a broader sense, the idea of proof of work versus proof of stake, I think is really, really important, because proof of stake is inherently centralizing. And what a centralization does is that destroys the idea of the whole concept of this, right? Like you want decentralized, you want it to be robust and resilient. And when you have things that are proof of stake, it is saying, I have more, I make the rules. Where Bitcoin doesn't matter if I'm Michael Saylor with a ton of Bitcoin or, I'm Isaiah with, $100 on his Moon wallet on his phone. It doesn't matter. The rules are the same. No one gets, higher credentials. And if you want to go down that rabbit hole, we can talk about why I see the switch, especially on Ethereum. Let's talk about Ethereum for a second. The issues there. And then maybe also from an investment standpoint, we can hit some figures to make some people understand.
And explain the difference between the two of proof of work and stake, because that's exactly where I was going to transition to, because people don't even know. I just had a conversation with a guy yesterday who was ready to deploy money into crypto. And he was like, I just see Ethereum being better. Like, proof of stake is coming. It's going to be cheaper. And I'm like, you're thinking about this the wrong way. And so I think we have to hit that basics of why proof of work is better and then go into that and what it is. So both are really.
Yeah. So from a high level, like the idea of proof of work is the same concept. And I'll give kind of like analogies as well. So the idea is you have to consume energy and have an input for an output, and that's Bitcoin. So if I go to the gym and I just walk in and walk back out, I'm probably not making any difference. And so the idea is you have to put in proof of work, sweat a little bit, make something happen. Proof of stake is, I have enough money. I can just hire, let's say the trainer or this or that, or I can go get surgeries and all these different things to make me look good. Like the idea of proof of stake is that I have more of a certain asset, I get more votes. And so the move to proof of stake, and I didn't know how far down we wanted to go, but I have a lot of info on this if we want to, but we might run out of time. That idea is inherently going to cause massive issues, because right now Ethereum still is proof of work. And a lot of people don't understand that. They've talked about wanting to move to proof of stake for a long time. And the merge has taken considerable amount of time. But I don't want to just beat up on them, because it's broader than just Ethereum, right? Like most crypto projects are saying, hey, proof of stake, because it's easy. You don't have to do anything, right? Like you just have to have the asset. And so if you start a crypto asset and it's VC backed and there's 40% given here and 30% given there and 10% here, and then, the rest of the population can have a certain amount. Who controls everything? It's the founders. It's the money that was put into that. And it's just inherently, it doesn't make any sense. It's a VC style investment, but for the most part, what it's traditionally been is, okay, let's go create some esoteric thing. Let's get enough demand where we can get listed on a Coinbase. Let's dump on retail and we make our money. And to me, that is something that is disgusting and should be stopped. And I am not to Morgan's point, I don't want more government regulation in the space, but that stuff is horrible. And I don't like it, because I think a lot of people that are I want to get rich quick, and I see this thing pump and I saw it on TikTok or I saw this, and there are all these people that are, influencers that are paid, and they don't understand all the conflicts behind the scenes of how this got developed. To me, that's the problem. And, there are lots of other things we go into, but just the general idea is that with proof of work, there has to be some sort of expenditure of energy to make this thing. And so you can look at it from a Bitcoin standpoint. Now, I think Marathon Digital, they're a big Bitcoin miner that's publicly traded. Their cost of production for Bitcoin is like $6,900 right now with their energy inputs. So if Bitcoin's at $20,000, it's a pretty profitable business, right? The input, they have CapEx, they have to buy the machines, they have to pay people, they have to have their facilities, but that's a pretty good business. And like there is money that has to be spent to make proof of work function, right? And make it work. So
yeah.
I think the other thing to add there is also that proof of stake is not a secure network. If you want to have a trust minimized system where you don't need to trust third parties and get rid of that monetary uncertainty that we currently live in today, right? You can't be on a proof of stake system. There is actually a study that came out from Stanford where they went through how proof of stake systems can be secured. And what they found is that proof of stake systems have to exist on top of a proof of work system in order to stay secured. And the reason why is that when somebody stakes their coins, they actually have to come back to a checkpoint every single month to confirm that they are in fact staking on the right chain. Once you have to come back to confirm a checkpoint, right? Who's there at that checkpoint? A trusted third party, right? You cannot have a proof of stake system that actually has a verifiable chain going all the way back without having a checkpoint to come back to that is a trusted third party. And I think that this is often missed in these systems where they are saying that they're decentralized, right? If Ethereum is currently a decentralized system, and we can talk about whether or not that's actually the case, but if they're going to move to this proof of stake system rather than the proof of work system, what they're actually saying is, no, we don't really want to be decentralized anymore. We want to be even more centralized than what we are today. And there are reasons why people want things to be centralized, right? The people who are creating that centralization benefit from that centralization, whereas the people like us who are at the bottom, we don't. And so with Bitcoin, with proof of work, right, you are opting out of that system. And I think that that's important to note.
Yeah. And just one of the ideas of like the centralization, like, yeah, it's faster when it's centralized, right? Because if it's all centralized, you can make everything quicker. Decentralized is going to be slightly slower. And right, go back to the idea of Bitcoin scales. And so there's trade-offs, there's different things, but like a great example recently is Solana, right? Like Solana's had downtime, and Solend had, their lending protocol built on Solana, and they voted to maybe take over a whale's position, which again, I saw it didn't actually happen, but there was this idea that they were going to, for the protection of the network, take someone else's funds and not let them sell. So tell me how that is decentralized. If someone can pass that and do that. So to me, that is a bunk claim. Like that is automatically should be a zero, and there's still money and value inherently in Solana. And to me, that's wild. And so you can look at different projects, whether it's DeFi hacks or different things, that there's just so many questions where I could never get behind telling someone to put their hard-earned money into that. Like, unless you have insider knowledge and can know the right times to purchase and then sell, that's the big difference. Bitcoin is not a sell. It's a one-way door. I'm not looking to get back to dollars. I don't want dollars. And there's lots of other people that don't want dollars either. They want Bitcoin. They'll spend and they'll use, and they'll make that, again, their money. They don't want other bad money. And so there's a really good piece that I would encourage everyone to read, and it's long and it's been out for a while. And every time I share it with people that are more into crypto, I never hear anything back. It's called Only the Strong Survive by Al Farrington and Big Al. I've never heard anyone come back and say, this is the flaws with it. They just don't reply. And the reason is that was put out before all of this kind of crypto disaster that's happened with Luna and other things. And they articulated a lot of these issues, right? Whether it's Curve and all these other platforms. And it's just really interesting to see that they had some foresight into being able to say, yeah, there's some issues here, and maybe people need to reconsider, because in an era of easy money, it's really easy to spin up projects that have no true value. And I think that's part of what we're seeing.
Yeah. Super good points. Question though. So, we're in a pretty interesting time financially. Markets are down a lot. And I think people look over and they're like, oh, why would I want to buy Bitcoin? It's down 73%. Who would ever want to put their money in something like that? What would you say to that?
I mean, I think relative to all other assets out there right now, this is the best opportunity. If you think about, so people like to compare Bitcoin to gold. So gold is like, what, a $12 trillion asset class, right? If Bitcoin does replace gold, right, the potential is a $12 trillion asset class. If Bitcoin replaces the monetary system, it's like $90 trillion, right? I mean, there's no opportunity out there like Bitcoin, whether it's, up 200% or it's down 73%. I could definitely not say the same thing about the stock market. And I'm very wary of the bond market, especially considering the fact that the US government now has to roll roughly 50% of their debt this year. You would think in the lowest interest rate environment ever that the US government would have a little more foresight to maybe issue 30-year bonds instead of extremely short-term paper that they continually have to roll. But, we have very high time preference here in the US. We're seeing that right now in Japan, right? I mean, those markets have been very, very wobbly over the last month. So like relative to every other asset class out there, and right, obviously I don't want to hold cash. We've been talking about the reasons why you wouldn't want to specifically just be in US dollars. Bitcoin seems just the most exciting, the most bang for your buck, the most undervalued asset class relative to everything else out there.
So just to piggyback on that. So I'm going to throw out a name, and this is no hate, love him to death, sees things very differently. Benjamin Brandt on Twitter back August 15th, 2020, right, made a comment when someone suggested that all financial advisors should have a 5% allocation to Bitcoin. He was like, I can't believe anyone would ever advocate for that. And again, this is a short time period, but if I go back farther, Bitcoin gets better, right? Because of the crazy returns that have been there. So I will use shorter time periods. And this is as of 6/21. And so this is after a 70% correction, but Bitcoin's up 74%. S&P is up 25. The international markets are up 8.5. Bonds are down. The aggregate bond index is down 11.5, and gold is just under 6. So tell me it hasn't protected you against inflation. Tell me that it hasn't protected you against monetary units being created, and tell me that is not a good store of value. All those things are true. You just need to extend your time horizon. And what drives me crazy about financial advisors is they preach and preach and preach long-term investing, and then measure Bitcoin in quarters, in months, and in periods of short time frames. but they won't
100%.
run, they won't run the math to show you that actually, if you had a 10% allocation, and let's say you even own GBTC, your Sharpe ratio, your drawdown, your total returns, all these things are much better. And that's with a product that has a 2% management fee that's had a net asset value drag. Like, run the numbers, people. Run the numbers, look at the facts, and it will show you that Bitcoin, if you just want to say, hey, Morgan, I think you're crazy people, it's not going to take over the world or anything else, it's just an investment asset, it still is value just in that. And you can own it as a financial product, right? As a GBTC, which is a horrible way to own it, because you should own it directly, spot, self-custody, cold storage, not on leverage, not on Celsius, not on BlockFi, not on Nexo, not on Voyager, right? But I don't know what else to tell you other than look at the results. Like, if price is truth, Bitcoin has won and will continue to win. And so I just don't know what else people, they don't like it because of what it challenges. And what it challenges is a lot of your assumptions of what you think money is are wrong. What you think investing should be is wrong. And that's what I think a lot of inherent conflict with a lot of advisors that I know is when I've gotten DMs from people that have actually read the Bitcoin Standard, dove in a little bit and read gradually, then suddenly from Parker Lewis, they're like, holy shit, Isaiah, maybe you're onto something here. I have questions. And I think that's the big thing, is that most people just have spent 10 minutes, read 2 articles and said, I'm an expert. And this is, it's some little snarky reply. And the funny thing is, there's a conference called Future Proof that's coming out there for advisors. If you want to future proof things, and let's say I'm even an individual investor, you want to own Bitcoin. That's it. Like, if you want to future proof and try to cut out some uncertainty, I think owning Bitcoin is the way to do that.
Yeah.
It's not an all or nothing thing either. And that's what I think people get lost. It doesn't have to be, you don't have to be a die in the wool Bitcoiner 100%. That's all you ever do. There are people that are like that. I'm not saying that that's what people need to do, but you can own some of this asset class.
Yeah. I love the way that you answered that and just took it fully from the viewpoint of Bitcoin versus, like, there still is the other side of, like, economic conditions. I mean, if we look, S&P 500 is down over 20%, and you look at just the companies inside of it, vast majority are down 50 to 90% from their highs. If you really think about a brand new asset class, or even if there was a company that was brand new over this time period, like, to hold that well in one of the most uncertain economic times we've ever been in, would actually, in my viewpoint, be like, okay, this is actually held up better than probably people would have expect with the conditions that we're facing.
Yeah, and one thing that I think is interesting is I watched the Changing World Order by Ray Dalio a few months ago, and that just got me thinking even more. We've never seen a world where the dollar isn't the strongest currency, where we're not the leading world order or whatever. And just based on the past cycles, that order could be coming to an end soon. I'm not going to say it is or isn't, but just like you were saying, Morgan, with the uncertain bond market and just kind of the stock market overall, like you were saying, Isaiah, I mean, Bitcoin can kind of be viewed as that future-proof thing because it's not tied to a certain economy or a certain country or anything like that.
Well, and I think something else that is really interesting is you don't hear risks of owning bonds, right? No, most advisors have grown up in a world where they've seen interest rates fall since the 1980s. And so they know one thing: stocks and bonds. I want more risk, own more stocks. I want less risk, own more bonds. That doesn't work. They've never seen high inflation. They've never seen a world where things do start to fracture. And the most dangerous thing to say in finances this time is different. It's not different. We just haven't seen it in history with anyone that's actually sat in a chair that's had to make investment allocation decisions. And if you want a glimpse into the future, and this is wild, I tell my wife this all the time, there are crazy people on Twitter that are in Bitcoin Twitter, but if you want to see the future, a lot of times it's there. And you look like a genius at times because you can see things as they're coming down the pike. And the US dollar has gotten extremely strong, right, against other currencies around the world. But you know what has gotten actually stronger, which is wild, is the Russian ruble. And the reason that's gotten stronger is it's backed by something. It's gold and it's oil, it's natural resources. And all of a sudden, in a world where everyone is so heavily indebted and there's all these contagion risks, having something that doesn't have those risks of counterparties and other things all of a sudden looks really attractive. And the Bitcoin that I hold, either in my head or my hardware wallet, again, not on leverage, not on an exchange, that's really safe and secure. There's nothing else that can provide that sense of comfort. And you don't have to worry about what's the price shown in dollar terms. Again, going back to Morgan, I know people make fun of that. Oh, one Bitcoin's one Bitcoin. Blah, blah, blah. But again, if you look at it over time, it's been so resilient in the face of a lot of people not wanting this thing to succeed, because there are a lot of folks around the world that are out of a job, out of positions of power if Bitcoin succeeds. And so, yes, it is very resilient to attacks. I think that is something that is wildly misunderstood. And you can even go back to China banning, Bitcoin mining. Half of the miners had to move. And if I told Amazon AWS, move all your stuff, how many outages would we have across the internet? Lots. How many outages of the Bitcoin network? How much downtime was there when that happened? 0. TikTok next block. So it's so resilient in the face of these things.
Yeah, I want to add one more thing, and that's that Bitcoin goes hand in hand with financial planning. We talk to clients all the time about, right, earning money, saving a portion of it, spending on the things that you love, right, but saving for the future and making sure that you're prepared, right? Look at that in the face of what governments are doing. Governments have no accountability when it comes to their budget. They print money left and right to cover their expenses. They take on debt whenever it suits them, right? These are not things that we ever advise our clients to do. We are constantly advising our clients not to take on high interest debt, right? To use debt strategically, right? Whether to use debt as more of an investment rather than to use it as something that as a consumption for your lifestyle. Bitcoin enables that, right? If you take the power away from governments, you are now aligning the money with what we know to be true, which is that you need to be financially responsible. And so what person wouldn't want that in their life?
Yeah. Great point. So Isaiah, you guys have both talked about like the investment case for it. And we were probably coming up on the last like 5-10 minutes. So this is kind of where we'll end it. But a common thing I hear from people is like, well, we don't put other currencies inside of our portfolio. So why would this change? And then the second one going off that is like, where does it come from? Because I hear people of like, well, I want to own equities. Why would I take it away from equities? But like, is that the right place in the portfolio where you dip from? Is it from bonds? Is it, you hold less cash? Like where does that fit into the portfolio?
So I'll plug an article that I wrote for CoinDesk about how to kind of put it into a portfolio. And you can look at it a lot of different ways. You could say, hey, if it's just a gold replacement and you like the Ray Dalio all weather, it's 7.5% of your portfolio. Cool. You could look at it as a growth sleeve. So maybe it's a 10% allocation. Great. Maybe you want to do the Dragon portfolio from Chris Cole and sub out gold. So it's close to 20% there. It just depends on what other pieces you have and what it is in your life. So again, I'll use myself as an example. I own a financial planning or co-own a financial planning company, right? I have a lot of traditional financial exposure. So do I need more stocks and bonds in my portfolio, or is Bitcoin a natural complement to that? So maybe I'll own more Bitcoin than the average client because they don't have that. Maybe maybe they're a veterinarian, right? They don't have a lot of traditional financial assets. So they need more of those, and Bitcoin can be a complement there. I think it's really hard to give this like, oh, it's always this amount, because it is going to depend. I know people hate that shit when you ask a question like, well, it depends. Well, it's like, well, I don't want to give you bad advice, right? But what I can tell you is you should own some, and the Mark Yusko get off zero is applicable. And I don't care if you're 65 years old, you probably are going to live till you're 90. And I think you might want some Bitcoin. And I think there is absolutely a great opportunity for people to come alongside and say, yeah, you should own it. The client of mine that first bought Bitcoin is 70 years old.
Yeah,
first
I would
person ever
add to
bought
that.
it.
I think if you are 90, you should still buy it.
He bought it for his daughters, and it's worked out.
I've been trying with my grandma for so long, trying to get my parents to buy some for my grandma, not happening.
Yeah. And again, if someone says, hey, I don't want this, I'm not a Bitcoin person, it's not like I'm telling them they're wrong and they're a horrible person and it's their money. They make the decisions. It's just like, well, the same way that anyone else does. I mean, if it's good enough for you and you do that in your personal life, whether it's working out or you eat a certain way or you watch things or you listen, you're going to recommend that to other people and tell them, hey, this improved my life or this helped. And I think there are some weird esoteric, like other ancillary benefits to Bitcoin that changes the way that you look at the world and changes the way that you think about life in general, because it does extend your time horizon. Things that I want to do around our yard, I'm like, I don't know if I would have done that if like 5 years ago, but it's like, yeah, I want to do that because that takes time and energy, but it's worth it because I'm going to be here a long time, hopefully, God willing.
Yeah. So I've been wrestling with this. A big theme we kind of talked about here is like, you have to own your crypto, get it off exchanges, all those things. But I mean, I think that is the perfect world. But then we look at a lot of people who are never going to do that. Like, it's super complex. Like, think about it. I have people, I got to help them set up their savings accounts and their automations. Like, they're not like doing all these extra steps. And so let's say Altruist or other places, by the end of this year, you can get exposure to Bitcoin. You don't physically own it and can't take it off. Like, Is that still something that should be considered, you think, for those type of people? And then slowly convince them of like, hey, we need to buy more separate. We need to get it on a wallet, but like, we also need a middle ground to get them on there. Cause I find a ton of people in that space where they barely know about it. So, this is the start. I send them podcasts, I send them books, I send them whatever, like, let's start learning about it. Cause I don't want you to be one of the people who buys solely based on price appreciation. And then 72% drop happens and you're the first one calling me to sell because we didn't take the step. Okay, great. We took this step. You're like, okay, let me put a little bit in, let me start, and I got to get used to it. Like, you think it's okay to start there first and have it on an exchange? Or, for me, I could put it in model portfolios for my clients.
Well, I think that you need to meet a client where they are, of course, always at any time, right? You can't force a client into a position that they can't take ownership of. I would encourage advisors, though, to at least find a solution where the client doesn't have to convert back to fiat to get their,
that's the hard part,
their Bitcoin position, right? At least find a solution where, okay, if we go and buy Bitcoin and yeah, you don't want to hold your keys for now, that's fine. But like, let's at least buy it somewhere where you can move your keys off. And there are places that allow you to do that. So I would encourage advisors to look at those. Swan comes to mind as
that's
a good
what
solution.
I was
Eagle Brook Advisors as well. They've been around a very long time. They have Bitcoin and Ethereum. I wouldn't obviously be buying Ethereum for clients, but that is another place that you could do it. And Swan's product is actually not out yet. So if you need to do this right now, then you can then you can go to Eagle Brook and do it. I would not encourage taking it to a place like OnRamp where you have to go back into fiat in order to get your coins off. Also, I mean, they've got a whole slew of other things that you can potentially do danger to your client's portfolio if you were to invest in those things. So I would just keep that in mind. Like, we don't really know what the future holds for the rest of the crypto space. And yes, I'm like Isaiah, I don't want a lot of extra regulation and everything else, but there are a lot of basically unregistered securities out there right now. You don't want to be the advisor that is investing your client in an unregistered security, right? So to mitigate that risk, right, Bitcoin is really the only one that you can actually be advising clients on. They've said that Ethereum is not a security, but they're actually losing the lawsuit with Ripple right now because they have stated that Ethereum is not a security based on how it was produced and everything else. So Bitcoin is really the only one out there that actually, the way it came into fruition does not make it an unregistered security or a company or somebody that has dumped a bunch of their asset, like pre-mined and then dumped it on the unsuspecting public. So I would just keep that in mind as an advisor of like, even though maybe my client's not there today, how do I make sure that they get the best access to this asset so that in the future, when they want to hold their own keys, hold their own coins, that they can.
Yeah, I think at the end of the day, Bitcoin ownership is derived by who holds a private key. And if I have to ask for permission, I don't own it. That's what makes the asset class unique. But yeah, you have to meet someone where they're at today. The other thing that I think is important to build on what Morgan just talked about and then kind of wrap up, out of the 20,000 cryptos, one has ever hit an all-time high in Bitcoin terms, 3 years or more after its first all-time high. And that was the Doge pump with Elon. So that's it. Outside of that, nothing else has regained that all-time high. And I would just say as an advisor, you're not missing out on gains by chasing crypto. It's Bitcoin.
Perfect. Any closing thoughts you guys have before we wrap it up? I know Morgan's got to get going. And if you have to drop off now, you're totally good.
Yeah, I would just say the best thing to do is educate yourself. Like Isaiah said, if you read 2 articles, you're not a Bitcoin expert, right? I've spent thousands of hours in this, right? The average person needs about 50 to 100 hours to truly understand what Bitcoin is. And then there's so many other aspects of Bitcoin that we didn't get into today, where you can just keep going down a rabbit hole until you've exhausted yourself there, until you're really just looking at source code, right? So I mean, to think that just by sitting in one webinar and reading one article, and then maybe even listening to this podcast, right? I would really highly encourage you to find other resources and truly immerse yourself in this, because the more you do, the more you're likely to see what we're seeing.
So maybe we need a part 2 and we'll go on those extra things. I'd be down.
That sounds good to me.
Well, thank you for joining us. I really appreciate it. Isaiah, you got anything else that you want to add?
Yeah, to me, it's just spend the time and energy to learn about Bitcoin. It's going to be here. It's going to be around. It creates a better future for everyone, regardless of what they think. And it's not a right or left political issue by any stretch of the imagination. You can look at it as just good money. And I think everyone wants good money and they want their time to be respected. Because if you create value in the world, you should be able to save in something that can retain and hold that value. And you shouldn't have to go out and speculate and invest. And I think over time, as Bitcoin adoption happens, you'll be able to then go take your Bitcoin and then go and invest it and truly make investing again, versus having to store it in something. As Morgan talked about earlier, most people are using like the S&P 500 as like their storage vehicle for long-term savings. It shouldn't have to be that way. You should have to have something you truly can store and not just see your purchasing power eroded. And again, run the numbers, push a financial advisor. If you're listening to this and you work with an advisor, push them, ask them questions, encourage them to learn. it doesn't mean that you need to demonize someone because they don't get it initially. It takes time, and I get that. But if they won't spend the time, yeah, there are people out there that are willing. I think, you know, 2 of them are on this call.
Yes.
Yeah, you guys are. And I appreciate that. And for me, like, that's it. Like, I want as many people to get and own Bitcoin as possible. Like, and I think that's important. And that's certainly, you know, a mission and a passion of both Morgan and I. We want to be able to make an impact. And I think there's a really great world that's out there, in a world right now that's feels scary. And there's a lot of things that people are upset and like nervous about. There is certainty in Bitcoin. And that's the one nice thing, is that you can have certainty in what it is, what it's been, and what it will be, because it does not change. And that is not a bug. That is absolutely a feature.
Yeah. Super powerful. Well, thanks for coming on, Isaiah. We really appreciate it. Thanks everybody for listening all the way through. Hopefully we'll be doing some more of these. And again, if you want to learn more, we have previous episodes that talk about Bitcoin, crypto, all of those type of things that had some great guests as well. So thanks everyone. And we will see you back next week.